Hello everyone, thanks for watching. So for our latest Artemis Live video interview today, I'm delighted to welcome Urs Baertschi, CEO of Property and Casualty Reinsurance at one of the largest reinsurers in the world, Swiss Re. Urs, it's great to meet you today and thanks for spending some time with me.
Good to be here, Steve.
So this interview takes place just in advance of the busy reinsurance conference season when market participants are meeting in locations from Monte Carlo to Baden-Baden, the United States, Asia and beyond. And really they're beginning their discussions on the end of year renewals at this time. Now, in his time working at Swiss Re, Urs has worked in investments and acquisitions for the company before moving to the reinsurance side and joining the Swiss Re Executive Committee, ultimately becoming Chief Executive Officer of P&C Reinsurance in 2023. And we meet at a time when reinsurance profitability has been high and the risk sharing between primary insurers and reinsurers has adjusted to what some would say is a more sustainable status quo. But as ever, there are questions over what happens next and where the market heads at the all-important January 2025 renewals. So it's going to be great to get Urs's insights here. We'll also touch on the importance of alternative capital and RLS, of course, in this discussion. But to begin, though, let's take a look at the current state of play in 2024. And Urs, perhaps we could start with Swiss Re's positioning in P&C reinsurance at this stage of the year, how the current portfolio is positioned and performing, and what you've been pleased with so far.
Yes, Steve, we're really pleased with how we've been able to support our clients this year so far. We've grown our business by about 8%, and we've been particularly active in some of the lines that our clients really need from us. NatCat, property, specialty, these are areas where we've been quite constructive and been able to actually support our clients even more. We have been cautious around the US liability space, and this has been an active discussion with our clients as well as we're thinking through some of the challenges in the industry there. And then beyond the risk transfer, we also support our clients with our data, tools, and analytics as well. So that's been a good start to the year so far.
Great. Now, with the Monte Carlo Rendezvous event fast approaching, just a couple of weeks away, it would be interesting to hear what your priorities might be for renewal discussions and negotiations this year.
Yeah, it's still really early in the year, and we're in the very active hurricane and tropical cyclone season as well, as we're already seeing. And no doubt that will be a big topic as well, again, in Monte Carlo. Generally speaking, as we look at the environment, at the supply and demand dynamics, demand is up. Clients want to buy more reinsurance to de-risk their peak perils, and we're going to be in an active discussion around that as an industry. The supply side is actually reasonably stable. There's been a little bit of an increase from some cat bonds late last year and this year, but overall, the supply side is reasonably stable. Then when you look at the risk sharing between the insurance industry and the reinsurance industry, there clearly was a lot of movement about a year and a half ago and 24 months ago around this and stabilized since then. And also the primary insurance has caught up around the reality of what it means to have higher volatility in the frequency space as well. And then finally, the risk landscape keeps evolving. And so it's really important for our industry end to end to reflect that evolving risk landscape in the kind of products that we offer, in the rates that are being charged throughout, in the structures, in the wordings. And so these are all going to be discussions that we expect to kick off in Monte Carlo and then throughout the rest of the renewal season.
There's a lot that's happened over the last couple of years when you look at how the market has adjusted itself. But it'd be good to hear your thoughts on price adequacy, especially in property catastrophe risk, and also your view on the attachment points and contract terms we're now seeing, and whether you think we can expect a disciplined renewal again, and what Swiss Re's intention would be here.
I think, Stephen, this one, there's a lot of the factors that we just discussed around the supply and demand dynamic, around the evolving risk landscape, and the sharing between the insurance and reinsurance industry. And generally speaking, we would expect the current environment that we've seen so far this year to maintain throughout the balance of the year as well.
So while the industry's been generating very attractive profits for its shareholders and stakeholders over the last year or so, we haven't seen the new entrants many had been forecasting. Why do you feel this is, and do you even feel there's room for many more players at this time?
Let's not forget that from 2017 through 2022, the reinsurance industry actually did not earn its cost of capital. It is true, 2023 and so far this year, it's looked a little bit better, but there is that history, and I think that history that we remember around what happened, what the underlying reasons were, why the industry didn't return its cost of capital, was around the frequency layers and the emergence of significant nat cat perils, particularly in the secondary space. Right. And what we've seen so far is that this new norm of more than 100 billion of insured losses from natural catastrophes is really here to stay. And that's a market reality. And the vast majority of that is driven by smaller events that should be picked up in the retention of the primary insurers. So with all of that, the history, the financial results, how the balance between the insurers and reinsurers and the risk sharing is finding itself in the market, we would expect the environment to remain largely similar to the discipline that we have seen so far this year.
Yeah, as you say, there's been a lot happening over the last few years that's affected this industry. But it has responded well, and it seems it's responded in a productive manner to try and deliver something more profitable for its stakeholders, which is good to see. Now, changing topic a little, I know from your past writings that climate change and resilience are both subjects you feel strongly about. How do you feel the industry is doing in supporting the transition at this time, and do you feel there's more work you can do?
This is naturally a very, very important topic for our industry, and clearly more work is needed to go after this. There are sort of three elements to think about this topic. One is around awareness. The second one is around mitigation. The third one is only then about transfer when it comes to the risks. Around the awareness and the science that goes behind this, we do believe that this is a multilateral discussion that should be expert-led. And we can do more to really understand the causes and then therefore what kind of mitigants we can put in place. The risk management or the mitigation around some of these risks is also a very important element. And this, again, is a multi-stakeholder discussion, and especially the public sector is a very important element of this as well. And then once we have awareness and we have mitigation, we can, of course, also talk about the risk transfer. And we've seen, obviously, a number of new technologies emerge in the energy sector as well. You see the industry support more and more on that, while also just realizing that the topics that we're addressing here are really important in the long run. And, we have to get going around acting on these topics a little bit sooner.
Yeah. Now, Swiss Re has always been a key supporter of insurance schemes in developing regions of the world, but sometimes it feels like that's perhaps not moving fast enough. How do you feel about the industry's sort of pace of closing protection gaps, and do you feel there's perhaps more that can be done?
Yeah, look, the protection cap keeps growing. It's $1.8 trillion worldwide in all lines, including life and health. And if you just look at the natural catastrophe protection gap, it was over 170 billion last year. So this is a massive topic. This goes back to the same kind of a framework. As awareness goes up, people know what is really risky and what they can protect against. Mitigation is an important element that goes into the public sector and what they can do, but also the consumer to a certain extent. And then once all of that is done, we can talk about risk transfer. I'll give you a personal story from my side that is very applicable here. And it goes to the risk mitigation element. I've had a house in Connecticut. I've had a house in Miami. It's no surprise that the homeowner's insurance is a multiple of what it is in Connecticut. I made a choice to live in Miami. But when we expose ourselves to those kind of risks, there's just an element of risk transfer that comes with it. And all of us need to realize what that is. And that's why this equation starts with awareness.
No, that's a really great statement to make as well, because still education is important as well, but also, yeah, people being responsible for the risks that they're bearing too, I think is a really important topic to get across to policyholders. So perhaps we could now shift sort of a little to talk about the role of alternative capital and how it plays a role for Swiss Re, working alongside your balance sheet, given your activity in the ILS market and the range of aligned strategies you're offering these days.
Steve, I'm going to take this opportunity to actually complete an answer that you asked me earlier about why haven't there been more entrants into the reinsurance space. But starting with alternative capital, this is a very important part of the capital structure in the reinsurance industry. It's predominantly been focused on the Nat Cat space. There could, over time, be other areas where it's also very effective. In most other traditional areas, reinsurance is still the more applicable way in which risk transfer happens for our clients. But it's an important part of the capital structure and one of the tools that clients have to mitigate their risks. In total, the capital in the industry is reasonably sufficient for the vast majority of the risks that we're talking about transferring today. Not all of them, but the vast majority. And I think that's a little bit behind why there haven't been more inflows of traditional reinsurance capital, particularly new startups, into the reinsurance industry. There's been some capital raises, some cat bonds, but that's been in the normal course of business as capital remains efficient, generally speaking, in the industry. Now, on the Swiss Re side, we support our clients with our capital markets activities in the ILS space, as well as we offer to our investors several vehicles in which they can participate in particular risk pools that we make available through the capital markets.
No, that's great to hear, and I do like the way you characterize it as part of the capital stack, because still too many people seem to look at alternative capital as something that just sits alongside you as a sort of speculative play, but really it's become quite strategic, I think, for the industry this year. So as we draw towards the close of this interview, it'd be interesting to hear your priorities for your P&C Reinsurance division through 2025.
Yeah, we're really listening to what our clients are saying, where they need more support from us. We do see the demand go up. Certainly the natural catastrophe space is on most people's minds. The topics are, of course, much broader into the casualty space, into the specialty space. So we're looking forward to engaging in that dialogue. We're looking to support our clients with our balance sheet, with our capacity, as well as with our tools. We're here to customize these dialogues, these conversations, as well as think very creatively about very tailored solutions that are most helpful to our clients.
Great. And then finally, how do you feel the industry is doing in efficiency terms? If you were to give it a scorecard, do you think the reinsurance industry, and I guess primary insurance as well, is doing enough to help try and keep the costs of protection in this volatile world as affordable as possible?
It's, of course, at the heart of what we're looking to do in our industry. You know, there's accessibility, there's availability, and there is affordability. And the totality of all of that is what ultimately is the benefit to the consumer, and how we as an industry can do a lot of good when our end clients really need us the most. It is an equation across everything. There's different products, different attachment points. The consumer behavior is a big element into this. I should make it a policyholder more broadly. It's not just the personal consumer, it's also the commercial consumer. There are risk management elements that influence the affordability and the availability as well. And that's an evolving risk landscape. Unfortunately, a little bit in our industry, we find out how we can help society most when there is an event, either small or large, and that can adapt and figure out ways in which we can actually close that protection gap and help more people when they really need us.
Thank you, Urs. That's a really great way to end the interview today. So I appreciate you spending some time with me today, and it's been great to get your thoughts on the state of the industry, and I wish you luck through your negotiations through the rest of this year.
Thank you, Steve.